Today, ladies and gentlemen, we're talking about that passive income, that dividend income, baby. And I'm going to show you my entire goal six-figure dividend portfolio, my income, and maybe you can help me with some advice, and maybe hopefully you can learn something from this as well. So let's jump right into this. Welcome back, my passive income investors alike. I know I over-exaggerate my portfolio a lot, and I just want to show you that this is pretty much the equatable amount to the dividends that I had come in this month, and I really want to talk about my entire dividend goals and the way I'm trying to mitigate and balance out my life and leverage it in a way where I have more freedom to chase my future, because that is always the goal, passive income. And this is about a 5-year goal for me, guys, and it's going to start basically at the end of this year once I start resolving all my past debts. Now, what do you mean by past debts? Well, it doesn't matter what you do, whether you're putting time into a job, whether you're taking out debt, you're deferring something into the future. So let's say you're putting all your energy into work. Well, you're probably, losing on your health, you're losing on your family, you're losing on your own happiness and free time. Like, there's so many costs, not only emotionally, but actually financially, and all these different things that come into creating a financial independence, retire early journey, or the goal of generating enough passive income to hopefully cover your expenses. And I'm going to show you how I plan on doing this right now. But first, we have to step into the past to see what I have past due that's going to reflect my future, because let's be real, a lot of money I've added to my $112,000 dividend portfolio. A good chunk of it has come from this year as well, because I liquidated a lot of gold. You guys watch this channel, you saw me on my video yesterday. I was talking about the gold that I sold at the beginning of the year when I actually started this YouTube channel. But I'll get to that in a second, guys. Many of you might know I do some odd jobs. I'm actually a little bit of a DJ, which has been generating me about $535 a month on average this year. Makes up about 15 to 20% of my portfolio. I'll show you some clips right here of me actually at a job on the weekend where I was doing this wedding. It was all day. I didn't have a lot of time to make videos for you guys because I was also doing a magic show before that. I'm a full-time magician, as many of you may know. I make about $2,200 a month on average. It makes up about 70% of my income, and it is one of the things that I absolutely love doing. I've been doing it for a decade, and I'm working on a very large show right now, which I'm going to get to in a second here, guys. But on top of that, guys, we're also making money off my portfolio. It was the reason I grinded so hard and generated so much of my time, giving up family, some of my health, a lot of other things. I've been grinding hard. Can you believe I lost 10 pounds? I lost 8 to 10 pounds this summer because I've been grinding so damn hard, and I've been eating out of basically forcing to, because my body's like, you need to eat, where I've been eating at like 2 or 3 o'clock and then just basically eating late night snacks, things like that. But I'm slowly starting to shovel steak and stuff back into my diet so I can start getting some winter fat on here, because I've never been this skinny. But anyways, guys, that's why we focus on our dividend portfolios for passive income. I'm not much of a growth investor. I do not like buying stocks specifically that don't pay dividends. Tesla, you're the beautiful exception though, Elon Musk. I got a lot of respect for that guy. If anyone's going to do the impossible, it's going to be him. I hope, cross my fingers here. I'm sure many of you are shareholders as well. But anyways, guys, so what I've done here is essentially my dividend income makes up for about $420 a month, but I owe past due because I need to owe taxes. We all have to pay our taxes. We have to pay our fair share. And I've been finding ways to mitigate that, which I'm going to talk about in a little bit. But as of the end of this year, I'm going to end up owing, if I don't touch anything right now, about $6,000, which is not a terribly large amount, but it's still pretty substantial. And I've already lowered it by putting $4,000 of it into my RRSP, my registered retirement savings plan. Now, what an RRSP does is it basically locks that money up, deferring all of the tax today, but you'll have to pay it tomorrow, but you can make all the money you want off that money without actually paying tax on it, which is beautiful. But the problem is unless I use like a first-time home buyers program, I can't pull this money out. It is locked in here. But I put $4,000 in at the beginning of the year at hopefully some future date to buy real estate, and it's currently saving me about $1,000 in taxes this year, but it comes at the cost of I can't live off the dividends, and I can't really use the money for anything except for real estate. So I'm trying to keep this as low as humanly possible, because I'd rather focus on the tax-free savings account where all the money in there I pay tax on, but once it's in there, all the money it makes is tax-free. So that's like perpetual money that I'm just reinvesting into the portfolio to hopefully grow it. Now, on top of that, guys, we got a whole lot of other things that I owe debt for. One of them is my show. I'm putting together, like I said, Full-Time Magician, big show. I talk about it a lot right now because it's coming up soon. I'm also performing at StockTwits, which I found out they are going to be live streaming, which I'll get you guys all the links. I'll take tons of videos. It's going to be a lot of fun, but more importantly right now, the show, it's costing me quite a little bit, which I'm going to come to in a second, guys. I think I put about $6,000 into this show, which defers quite a bit of tax, but at the same time, I'm going to lose. If I don't know how well this is going to sell, I've got most of the theater pretty much paid off at this point. So right now at risk, I think I might end up losing about $2,000 on that rental. But a lot of this I'm going to get back to in a second, and I'm so excited for this show. And I'll tell you why in a second, guys. I can't wait for this. But before we get into the future of what all this is causing, let's talk about, first of all, the present. What's going on right here, right now, guys. So first of all, when I quit DJing, which is something that I've talked about in the past, at the end of this month, I need my time back. I need to spend some time with family, guys. I need to work on my health. I need to start working on my passive income goals, which I will get to in a quick sec here. But losing DJ income is going to basically knock out somewhere between $500 to $700 a month on average, which is quite a big ding. But when I look at what it cost me in time, energy, and everything I put into it, I think my time to me at this point is a little more valuable than the DJ income. I've been having a lot of issues trying to grow. So I mean, for the time versus value, I just can't justify it anymore. It just doesn't make sense. But magic for me, guys, is something that I have absolutely done for the last decade of my life. It's been part of my soul for a while now, and it's pretty much led me to where I am today for this video for you guys. And the opportunity I see in my magic career is pretty much endless. I used to busk, made good money busking. I always figure worst case scenario, I could always go back to busking the streets of Toronto and see if I can't hustle like the good old days. But there's always restaurants. I've done tons of stuff. I could start looking into cruise ships to maybe do some of the talent shows. I don't know. I've just done this so much that I've been making a half decent income off of it, especially for the last 5 years. It's been very healthy for me, and it's been really honing my skills to the point where I felt comfortable enough putting on a full set theater show. Let me move into the portfolio, what I'm doing, and then what I'm going to do is kind of break down the stocks for you at the very end of this, because there's a lot of cool news going on today. But essentially what has been going on is I've been trying to find the best way to defer my income that is sitting in my portfolio. I thank God I'm not one of those people that just spends my money frivolously, and I know that I have to pay tax, so I always just dump all the tax money in my portfolio. I did last year. I made about $500 or $600 off Facebook. I try and put it into stocks that I feel comfortable with in hopes that I'll make an income in a short period of time, but no guarantees with that, right? So I was actually on the phone with the CRA this morning, the Canada Revenue Agency, to see if I could use my RRSP to pull that money out and put it into a qualified REIT. Qualified REIT just means it is a real estate investment trust. So it's like a public company that basically manages a bunch of real estate, and people pool their money together to basically buy these real estates, and then we get paid out a healthy, pretty much the majority of the income that property produces. Now, what makes that qualified is that if you live in Canada or the US, what would mainly qualify for a REIT dividend is buying REITs that only deal with Canada, that are usually residential or industrial or something specifically related to just Canadian real estate, because then the government appreciates the fact that you're helping grow the economy. But it turns out you can't actually pull money out of your RSP to buy anything other than a first-time home. What I was hoping to do was take all the money I have that I'm going to pay taxes on, that $6,000, put it in my RSP, pull it out and draw against first-time home buyer, but put it into a qualified REIT. Turns out that's not possible, so I'm back to my last two options that I plan on doing here. Now, my other option too here, guys, is I can build a business or invest more into my business. And what I'm doing is investing into my business to portabilize it. I've been telling you guys, I've been basically working on this show. I've been putting a lot of money into that. I've been putting money into basically equipment. I'm going to be buying a laptop, trying to make everything as portable as possible so I don't have to work just here in my office, which I think would be much better for my career as I want to travel more. But I could also buy an online business. Now, the problem I've been having with buying an online business, guys, is it takes quite an amount of money. And I found people that I've been able to raise money from. Actually, I got people that are willing to donate a portion to own one of these online businesses with me, and then I would finance the other half of it while putting up the money myself, which would completely defer me from that tax income. It would give me immediate revenue, but the problem is it's going to cost me somewhere around, I think if I were to do it, $30,000 in debt, well, $20,000 in debt and probably about $10,000 to $15,000 funded from somebody else, including the money that I'd put into it, which would give me about $50,000. But the problem with that is if something went wrong, am I smart enough and educated enough to make the right decision? That's what I have to know. So I've been taking a bunch of courses and learning all about these crazy cool online businesses. But like I said, guys, you want to be educated before you make any drastic decisions when you're taking out debt, because what that could cost me if I'm $30,000 into owing somebody something, what that ends up causing is if something bad happens and they need that money back, what's going to be where that money's going to come from if I'm not making a lot of income off my job is my dividend portfolio, my tax-free savings account, because that's the only place I have money left. And you always have to ask yourself when you're making a decision on spending a lot of money is, if something goes wrong or I'm never going to see that money again, how bad is it going to hurt the rest of my my portfolio? And if it's going to be that big of a hit where I could lose a substantial chunk, I need to make sure I'm educated enough to make a decision that's risky. And right now, I'm still debating on how much and how comfortable I am with doing something like that, though I'm constantly educating, and it is where I'm going to end up going. I just need to get my income up. And the way I plan on doing that, guys, well, is through a bunch of ideas. I love doing my shows, but I'm generally trying to take off DJing to focus on passive income through this YouTube channel. I'm going to start some websites. I'm using Google ranking, and I've been learning a lot of the ins and outs of YouTube and what works the best. And I want to be able to focus more time into this because I think there's a lot of potential here, and I love teaching you guys about finance. The value I get out of doing the show is something that Grant Cardone said. I wanted to give back to my family and a lot of my friends and a lot of the people that I work for, to show them what I have capable to me and what I am capable of. And even though there's still a good chance I can make money on the show, I just know that the theater's paid off. I'm not going to really end up owing anything, which is the best part. I've got about 250 seats filled, give or take about half the theater, and I'm hoping word of mouth spreads. But I've been trying a bunch of different things, which led me down the road of learning like sponsorships. I've written an entire script. I've learned how to do proper scripting, guys, of my entire show breakdown, which I'm really looking forward to. I don't want to reveal too much, but this is basically what a script looks like when you have to work with a bunch of other people. But like I said, I learned all the BS. We're talking about insurance, guys. I actually have something now that I can copy and paste to other places. And I've learned I can't get over the knowledge and the networking that I've done working with the sponsorships that I've worked with on Main Street in Markham, where basically all these shops have allowed me to come in. They've allowed me to promote myself. They've allowed me to do a lot of different things that I'm so grateful for, because it also led me to going into the theater on Wednesday. This Wednesday, guys, I'm performing at that theater where I'll be doing my show, because it's great, because I'm going to be working with the technician that I'm going to be working with the day of my show. And on top of that, guys, it's just incredible to work somewhere that is the atmosphere I really enjoy. It just makes me so happy inside to be able to give back to my family and also promote myself and get myself in a position where I can get a little more recognition and get a little bit more under my belt. So when I decide to expand past this point, I have a lot more tools and a bigger tool set to work with. But like I said, that's one big chunk, along with the businesses, building online businesses and focusing more on family and time, kind of all is jumbled into this big mess that's going to lead us into the future. And what I want to talk about the future for a little bit here, guys, and the only way to talk about the future here is passive income. I'm going to dedicate the majority of my life at this point to what I love, which is magic, family, girlfriend, time with my friends, instead of wasting it all. I've given up a lot to get to this portfolio, guys. It comes with that sacrifice, that cost of give and take. And that sacrifice for that portfolio to get to where I am, I think, is incredible, but I can't work myself into the grave to keep getting these numbers up. What I need to focus on is taking the tool set I have and putting it towards something like this YouTube channel, online businesses, passive income that I can use portableized anywhere in the world so I can focus on my shows, is the main concept that I'm trying to generate here. And it's going to take me probably about 5 to 10 years to get to this point where I know my bills are going to be able to be covered. And either way, guys, I'm in a really good position right now because I'm still living at home, and that's why I'm taking on all of this risk. That is why I'm quitting DJing, because it's been a good job, but there's no means to an end with it, and it is debilitating to work till 2 a.m. Dealing with drunk people and whatever else, and then spending days recovering while I'm doing shows and things like that. It's just very unhealthy. Mixing with all this crazy stuff that I'm trying to do. So in the light of just making more time for friends, family, balance, and bringing the whole thing into a good full circle, we're going to take a look at my portfolio for you guys now and break down all of the news, because man, things are coming back and I want to tell you why. So let's head on over.
Ladies and gentlemen, I'm terribly sorry for the scattered videos, as I mainly like focusing on stocks and stock market dividend investing, because let's be real, there's a lot going on in my life right now, which makes it rather complicated to keep up with this. But I'm doing my best, and I promise come October, it's going to be my main focus. But we're going to start with the tax-free savings account, baby. This is where I make all my dividends tax-free, and I've had incredible capital gains, and there's so much news going on with Trump, China, tariffs, because these companies are bigger than the government. They have more control, and we've noticed now, all of a sudden, these companies are getting tax breaks from all of these tariff wars, like Tesla, 3M, Starbucks. The list kind of goes on and on and on. We're starting to realize that this tariff war is kind of just becoming a joke, which is kind of funny, really. But anyways, we'll start at the very top of the portfolio, and then we'll get more into that. We've had some dividends in here. We can see I've had some good income come in that couldn't be reinvested. So we got a little bit of cash sitting in the account right now. But starting with the Canadian side of this portfolio, we have Bank of Nova Scotia. We have Canadian Imperial Bank, which are Canadian Imperial Bank specifically being shorted by the great Steve Eisman that predicted the 2008 crash. Now, I honestly think Canadian Imperial Bank is going through some weird phase right now because they're really building up loan loss provisions to protect themselves from what might be a coming credit cycle so they can mitigate some risk, but it's hard to evaluate if that has been priced in with how much the stock has actually dropped recently, especially considering they've increased their dividends, their cash flow is still kind of increasing, and they're doing a pretty good job on the management side of things. But I've overpaid for this, and I want to leverage down slightly. I still want to hold this for my life. I love this company. I love the banks. I love them for their dividends. And what I want to do is just scale down about 3,000 at the most, just to bring the position into size, because it's just a little too large. But I have no problem with patiently waiting for it to come back, which it started to do, which we can hope isn't a dead cat bounce, but it's up a little bit. So we'll see where it goes from here. My Northland Power utility is on its way down. I'm not too sure what the news is on this. I'll have to look into it, but it has been on much of a tear lately, which might be pushing a little too far to the upside considering its average dividend yield is usually around 5%. Leading me into my other utility, which will scroll straight to the bottom of my U.S. holdings first, just to keep in relation here. We can see Southern Company is just the tear never stops. This company has like a 50-50 split of people that like it and hate it. And my average yield on cost is 5.5% on my dividend yield. And today the yield is 4.17. So I definitely pick this beauty up on a discount, but it's crazy how much it's run, and I'm kind of happy with the position at this level, which is why I have it set up on what is called a DRIP, where I get dividends that get paid out in shares instead of cash, which I like. But let's just go back to the top. I just wanted to keep that in relation. But talking about MO and BTI, these are my my wonderful tobacco picks. But MO has been under a lot of fire lately, guys. And the reason for that, well, people have been dying from Juul. Not conclusively, but that's what the media likes to say. There's been several kids of incidences dying or having major lung issues, but they also have been found to be smoking other products, marijuana and God knows what else. And it's crazy how the media takes this stupid little thing and blows it up, considering 400,000+ people die a year from tobacco. Doesn't make a whole lot of sense. And then on top of that, people didn't seem to impress with the merger that might be happening. In fact, it's going to be one of the largest mergers in stock market history if this does happen, because Philip Morris, that used to actually own Altria Group, wants them back, and I think they would get the best of both worlds. They both have perks that the other one doesn't, that I think would be better merged than apart. And I honestly think most of all the bad news has been priced in. Their books are amazing. The dividends they can definitely afford to keep paying, and I have no problem holding this. In fact, I hold a lot more of this, which we'll look at in my other managed account in a sec. But yeah, I'm really comfortable with these tobacco stocks right now, and I'm really curious to see what the future holds for them, but I think it's going to be very fruitful. Considering MO has been literally arguably one of the best performing stocks of all time with the dividends increases that it has had. Now, looking at my tech stocks, the growth part of my portfolio, I hold the tech stocks, only tech stocks that pay dividends, except for Tesla, with a wonderful exception, which we'll get to in a second as well. But we're looking at Microsoft and Apple here, which I can't get over, have been doing exceptionally well. In fact, I bought a new iPhone, and I sold out of some of my Apple because I was looking at about, I think, $3,000 or $4,000 in capital gains. Don't quote me on that. But I put some of it into MO and BTI, and I also bought an iPhone, but I didn't pull the money out of the account. I just made it feel like I was buying an iPhone because they pay for it. I mean, I don't know. I like to think that sometimes that, I have enough money in the Apple shares that it'll actually pay me to buy their products. But looking at my last one in this account, GEO Group, guys. Look at the GEO Group, this prison stock. Oh my goodness. Elizabeth Warren was one of the uprunners. I don't think she's even going to get close to being the presidential electoral whatever. I don't live in the U.S. I just pay attention to this stuff because I own this prison stock. Now, this prison stock, guys, is so much of a conglomerate at this point. Like, you can't uproot the system. They have global exposure. They deal with kids, rehabilitation, help with mental illness people, and they also deal with lifetime prisoners. I just think you might see some fluctuations in basically the taxes that the government's paying, because you have to fund this, so they might change the budgeting now and again, but I guarantee you this is going to be a reliable dividend, and this has been one of the best performing REITs of all time. It's a very unusual REIT to be classed as. Over the last 5 years, we haven't had much, but a really good dividend. But I promise you, if you look at the full charting, it's absolutely beautiful. This company's had a crazy rate of return. It's been around since the 80s. Beautiful, beautiful company. But let's just take a look at basically the more important account that I have to deal with right now, which is my managed account. it looks like I'm down, but I promise you I'm doing quite well with this account. And I'm really happy with the positions. But the problem I have with these positions is the taxes, man. The taxes, man. The taxes, man. The taxes, man. Yeah, so essentially, if I don't do anything with this money as it stands right now, I'm probably going to have to take $6,000 out. Mind you, I do have 3 months left in the year to sock some money away to help pay for taxes as well. Now, the problem with this account is all the money in here, I have to pay taxes on, even the dividend income that's going to be coming into this portfolio for the majority of it anyways. And we can see, like, we have 3M in here, guys. This is where Altria grew up. My first purchases of British American tobacco, which I will be leveraging down in. And like I said, I can either use the RRSP, but the problem with that is it locks it up unless I'm only buying a first-time home, which doesn't really help me today. And I don't know when I'm going to be buying a home, so I don't know if it's the best option to be funneling money into there when I want cash flow now. So what I could do is try and find a nice balance where I could keep some of the money in here just in case I ever want to buy an online business, pay a reduced tax rate by putting some more, like maybe another, 2,000 or 3,000 of this into my RRSP, and then essentially minimize some of these positions, like bring down MO, BTI, maybe try and level out some of the portfolio a little bit and buy into some qualified REITs, because that will bring my income up. And yes, you have to pay income on REITs, but if they're qualified, you only pay a capital gain rate in Canada of 10%. Which is absolutely wonderful. And I think that would be the best option, because then I can pay taxes but keep my dividend rates up. It just might cause me to have to sell some of these positions off. And I'm going to tell you right now, I am not selling my Tesla shares off. I will be taking those to the grave with me for the time being. And I don't care that I'm down this much on it. I love this company. And like I said, I'd buy more now if I could. But because I need to focus on taxes and dividends, this year's been a little rough for me buying anything that doesn't pay extra income. But like I said, I own some more shares of 3M in my other account we're not going to look at today. That's my Royal Bank account. But 3M has been coming back with a vengeance because they've gotten crazy tax breaks, like I said. And I got some of my best shares of BTI in here because I paid like barrel bottom price of like 33, 34 bucks. So I'm hoping we can see a pop in these and I can sell some of them off and then, use some of it for tax money and then defer some of it into my RSP. And then, like I said, I'm going to take 6,000 of the money in this account at the end of the year, because you're allowed to add 6,000 a year to your tax-free savings account. I'll push it all into there and then just pay the taxes on it, because that's something that I'm going to do for sure. You might as well just pay the tax on the amount they're going to allow you to put into that account, because the money it makes is absolutely amazing. Tax-free for the rest of your life. What more could you ask for, right? So if you can let me know in the comment section below what you think I should do with this account, what the best options would be. Like I said, if I buy an online business with all of this money, I lose all of these positions, and then I'm stuck being leveraged in a very large amount, at least for right now, in a business where I might be better off knowing I have time today to work on an online business, maybe starting my own, including part of this YouTube channel as doing so. But I got a lot of options that I'm just rolling around in my head, which I'll focus more on October. But let me know what you guys think. After this video, I'm going to leave all of this kind of at par for now, and I'll come back to it at a later date, because like I said, I want to focus more on stocks for you guys. But as we can see, all these positions are holding up quite nicely. I'm not really down on anything but MO, which is fine. I don't mind being down as much as I am on this position. I'm comfortable holding these for right now, and I really like them. And then finally, maybe we'll just take a look at the RSP. So this account is going to save me $1,000 in taxes. That's why I put a bit of money in here. But like I said, it's fun holding this for a long-term gain, but I'm not going to be, 60 for a very long time. So I'm stuck holding this company, not knowing when I'm ever going to be able to use this money. And I mainly put it in a Vanguard index just to protect it, which is the Canadian version of the S&P 500. So if you guys want exposure to the S&P 500 index but don't want to have to deal with the conversions of Canadian to US dollars, the Vanguard has done something amazing by making this little stock, or this ETF called VFV. You can check that out, and it's basically going to hold flat. I don't expect to see much out of that. It's just to protect the money in case we see a crash. At least I know it'll be okay sitting in there, and I make about $68 in dividends off that, but not that I can really use them for anything. And like I said, the problem with this account, guys, if I want to use this money, you're going to be paying penalties. A lot of people don't think you can just pull this money out and then you just pay regular tax on it, but you don't. Once you put money in here, it becomes basically locked up. And if you decide to pull that money out, you pay an automatic withholding tax on a certain amount of that money. The more you pull out, the more withholding tax you pay, and then you also have to pay regular tax. You end up losing like 40% of the money you put in here. So you don't want to screw with it. But I don't know how to utilize it properly right now because my income is just not high enough to utilize it for real estate or anything else in between. But I hope you guys enjoy this quick breakdown. I'll break the dividends down a little bit later on when I see what is going on with them. Too much going on today to fully do that, and I don't want to take up any more of your time. So let me know what you guys think I should do with this managed account. I love these positions. I don't want to lose them, so maybe I could take some of them and put them into my RRSP just to defer for now, and then use some of the positions that are oversized, like British American Tobacco, alter your group, and put that into qualified REITs to bring my overall tax on dividends down on this, and then to also finish up paying the tax income that I have to pay on this money that I've earned anyways. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.